Hello investors, this is Stuart Kruse with CAM's video chart of the day. Right now you're looking at just a headline. And what we're going to talk about today is early stage delinquencies in mortgages. So here's a headline, jump in early stage delinquencies. And really here's the chart that I wanted to point out. So what this is a chart of the mortgage rates that have gone from being current to being basically 30 days behind. And if you recall, the financial crisis of 2007 and 2008 were led by mortgage delinquencies. So if that's any kind of indication, if I'm going to look in the beginning part of this chart in 2007, and you can see a clear rise of the rates of transition from current to 30 days past due, you went from about 1% up to over 2%. So that was a double. And at that time, that was pretty scary. You can see a trend down for over a decade. Longer, and now we have a spike of not just 1% to 2%, but to 3.4%. Right here, that was the largest increase basically that we've ever seen, and it dwarfs the 2007 crisis. Possibly because all the stimulus checks are running out, people have to go back to work at some point, and the cash flow is not going to be there because there are a lot of people out of work. So what is this trickle down going to be for the rest of the economy? Well, we're gonna have to wait and see. But given that the economic prices in the stock market are such lofty PEs and such lofty levels, this could really have some damaging effects. Think about what happens if you just get an adjustment to the PE ratio. Let's say Apple's trading at a PE of 30 when it normally trades at a PE of 15. If it just comes down to lofty levels of a PE of 20, it gets cut by a third in the stock price. And that can be said for just about any of these tech high flyers. So stay tuned for a discussion about growth versus value tomorrow, but we're gonna keep a close eye on this because these are some leading indicators of what could happen to the market. So invest your money safely and soundly. This is Kruse Asset Management signing off.